Hello students, this is Shesi George, your professional accounting teacher. So in this video, we are going to continue with the part 3 of the bank reconciliation. All right, so if you have not watched the part 1 and 2, please try to do that before you continue with this. So I want you to do me a favor by reading through this question. You can pause your video and read through the question. If possible for you, you can write it down, the question, so that you follow as we solve the question. The question is on bank reconciliation, okay? Bank reconciliation where the cash book has an overdrawn balance. So the part 2 is where the cash book has a normal balance. That's a favorable balance. I've explained that in the first video. So please read through the question. Okay. Having read through the question, you will first read the requirement. The requirement says that you are required to prepare adjusted cash book and B, bank reconciliation statement. So to start with, you will draw your formats. The name of the business, as you have read, is Johnson. So you write Johnson's book, adjusted cash book. Then you write your bank reconciliation statement as at 31st December 2012. Is that taken? Then you now go to the question. Now the question is, Johnson's cash book shows an overdrawn balance of 3,000, okay, of 3,000 naira on 31st December 2012 on his current account. So let us treat this first. Overdrawn balance. See, the overdrawn balance will appear on the credit side of the adjusted cash book as balance brought forward. So you write balance brought forward. That's 3,000 naira, okay? All right. Then the balance as per the bank statement was an overdrawn balance of 800 naira. Like I told you, overdrawn balance will become a negative balance. So you go to the bank statements, you write balance per bank statements. Don't forget, it's an overdrawn balance. So we put it in brackets. So we are going to have two columns here. Okay? Because we are told that it is an overdrawn balance. Then we are told that further investigation shows the following. Check amounting to 5,000 naira had not been presented. Okay, had not been presented for payment. So if the check had not been presented for payment, what do? From the formats I gave to you, you will always less on presented check if you start with balance as per bank statement, whether overdrawn balance or favorable balance. Okay, you will less on presented check. Okay, so from the format. So let's do that now. So we have less, just leave about 2-3 lines. Then you start from here. Say less on presented check. On presented check. On presented check, and that figure is 5,000. So you can put it on this first line. Less on presented check, 5,000. Okay. So just tick out this, all right? Then the Roman figure 2 says that check amounting to 2,005 entered in the cash book as paid into the bank. Enter into the cash book as paid into the bank had not yet been cleared by the bank. Had not yet been cleared by the bank. And this is nothing but uncredited check. So this is uncredited check. So from the format, When you start with balance per bank statement, you will add uncredited check will be added. Okay, uncredited check will be added to this. Okay, so you come here, you have add uncredited check. Okay, class, and that is 25. All right, so let's go to the next question, which says a checkbook costing. So you take this, a checkbook costing 400 had been charged in the bank statement but not entered in the cash book. A checkbook. So if the checkbook has been charged in the bank statement, it means the balance in the bank statement has been reduced. The customer's account has been reduced. So you go to it will be adjusted in the adjusted cash book. You write costs of checkbook, costs of checkbook. So ordinarily, when you make payments, all right, this payment has been deducted in the bank. Ordinarily, this is the payment side of the cash book. You will credit the cash book. Okay, so you just write cost of cash book, which is 400 naira. Okay, all right, so you tick this has been done. A dividend of 400 paid directly to the bank had not been recorded in the cash book. So when the customer received dividend that is being paid directly to his bank, what do you think the customer will do if he knows about it? Of course, that is the receipt side. It will debit the cash book. So let's go to the adjusted cash book to debit the cash book. Or if you look at it from your format, dividend received. So this is the receipt side of the cash book. So the dividend will be debited. All right. So we have dividend. So we write dividend. All right, and that is 400 naira. Okay, 400 naira. So this has been done. You tick. Then we have a check for 1,200 naira drawn on his account. Drawn on his account had been charged by the bank to his deposits account. To its what? Deposits account. Okay. So if a check drawn for 120 on his account, that is on the customer's account, had been charged by the bank to his deposits account, so automatically the bank has increased the current account. Okay, the bank has increased the current account because a check for 1,200 drawn on his account, the customer has reduced his own bank, that is his own cash book, by this amount. That's the meaning of drawn on his account. But the bank charged this account to his deposit account instead of the current account. So it means that the current account has been added. That is, and I will call it indirect crediting. Okay, indirect crediting of the current account. So when you have bank error, and that mistake is from the bank, okay, which is automatically an indirect credit entry. Okay, then I told you when you start with bank balance per bank statement, you will less bank error credit entry, okay, from the format. So watch the first video where I've explained all this bank error credit entry. All right, so you have just write bank error. Okay, that is 1 2 will be less, that is less bank error. Okay, 1 2. All right, now let's go to the next item. So we have a check for, so this one is done. A check for 500 paid into the bank had been dishonored and shown as such by the bank, has been dishonored. So automatically that is dishonor check. So from your format, the dishonor check appears on the payment side. Okay, yeah, that is dishonor check. It appears on the payment side. All right. So you go to the payment side, you have this honored check, and that is 500. So let's go to the next item quickly. So this is done. Then we have the payment side of the cash book, the payment side. And what is the payment side? Of course, that is the credit side of the cash book. The payment side of the cash book had been undercast by 700. So from the formats, when you have undercast payments, that's the payment side, undercast payments side, okay? So will be credited back to the cash book because this side has been reduced by that amount. So we credit back to the cash book, okay? So we have undercast payments. All right, and that gives 700. Okay, all right. Then the last item, but not the least, we have bank charges of 300 naira entered in the bank statement had not been entered in the cash book. Bank charges, so it's a payment which has not been entered in the cash book. Okay, so you go to the adjusted cash book. Of course, when you look at the formats, bank charges is on the payment side. All right, so you go to the adjusted cash book. So you have your bank charges, and that gives 300. Okay, so with this, just pick up your calculator. That's the last item there. So let us pick our calculator. All right, you add this side. So let us add the credit side, which is 3,000 plus 400 plus 500 plus 700 plus 300. Okay, and that gives 4,900. Then you have your 4,900 naira. On this side, you write the total 4,900 naira. Then, of course, the balance falls on this side. Then you say answer minus 400 minus 400. That is 45. So we have a balance carry forward of 4,005. Then you bring down the balance here. Balance of brought forward of 45. Now, what type of balance is this? So this balance is called an overdrawn balance. It's an unfavorable balance. Like I told you, then let's balance up our bank reconciliation statements. So I'm going to teach you a logic. This is addition. All right. So all you need to do, you close this up. That's 2 5. Then you add this together, and this will give you, of course, 6,200, which is in brackets. Okay. So if I were you, I will start with the positive. So look at what I'm going to do. I'll start with the positive figure, which is 2 5. Then minus the negative figures, minus 800. That's 800. Then minus 6,200 minus 6,002. Okay, that is a negative 4, 5, and which means is which means is an unfavorable balance. So look at the 4, 5 here, and look at my 4, 5 here. Okay, so that is overdrawn balance. Okay, as per bank adjusted cash book. So you now write overdrawn balance as per adjusted cash book. Okay, all right. So when the adjusted cash book has a credit balance, so that is an overdrawn balance. That's why this is giving us a negative figure. Hope you understand this question. So if you love this video, please do share with your friends, and remember to subscribe to my YouTube channel to get more lectures or teachings on accounting principle. Okay, thanks for watching. Bye for now.